Market end lower after hitting fresh highs as Nifty, media, metal, oil and gas drag the markets lower, while banking and financial stocks end higher. New woes for ITC as shareholder advisor firm IiAS advises shareholders to vote against the demerger of the conglomerate's hotels business, says the proposed structure does not provide a complete value unlocking. More big names as advisors for Hyundai India's IPO. Kotak and Morgan Stanley joined the party, which includes Citi, HSBC and JP Morgan, says a Bloomberg report. The offering is likely to be filed by July. The Pune Porsche accident case gets murkier. Pune crime branch arrests 2 Sassoon Hospital doctors for allegedly switching the blood sample of the accused juvenile. Over 23 crore people have moved above the poverty line, says the Defence Minister Rajnath Singh. In an exclusive conversation, he told NDTV that India will be amongst the top 3 economies in the world by 2027. Cyclone Remal leaves a trail of destruction, claims 2 lives in West Bengal. A man in Kolkata dies of injuries from a wall collapse, while a woman near the Sundarbans loses her life after a tree fell on her head. Well, good evening and welcome. You are watching The Reporter on NDTV Profit and I'm Nupur Talwar Suri. First up, as always, we take you through all the market action today. In fact, for that, it's over to my colleague Harsh.
Well, the benchmarks closed lower for the day to start the week, but we had an otherwise very steady start to the day. In fact, all the way up to maybe 2:30, 3 o'clock, we had a very strong day of trade where the Nifty 50 was concerned. In fact, look at that chart. We hit the day's high at 2310, so we breached that 23,100 mark. And thereafter, we saw a bit of a plunge and almost went from just off the day's highs to the day's low in just about an hour or so of trade. And of course, we've ended slightly better than where we were at, where the day's lows were, but nonetheless that was a sharp fall, and that's probably what the indices have seen, which is why the Nifty is ending or closed in the red. Let's pull up the heat map to try and figure out which pockets have done well, and you'll see Divis, of course, very strong numbers, but outside of that, private sector banks did do well. You saw IndusInd, Axis on that list. Adani Ports also a positive. And we saw an HDFC Bank also contribute around 0.7%. So the gainers were largely private sector, as well as you had an SBI there. But among the losers, what you've seen is a mixed bag. Some PSUs, you're seeing a bit of M&M there. And also pharma, you saw Sun Pharma, which is down roughly 1.1%, and FMCG as well, some pockets there. So that's the texture. Let's pull up the contributors. And what we largely see is the movers were the private sector banks again, HDFC, Axis, and Reliance. Reliance contributed 20 points to the downtick. But actually, it was the move on HDFC which has actually pulled markets lower. So let's pull up the line graph for HDFC and see where that move has happened and try and figure that out. What we saw was it went all the way from the top there. It's exactly the same move as the Nifty 50 has made. It's the exact same graph. So actually, it's the heavyweight HDFC which has really moved the index as such. Even Reliance, if we can pull that one up, pretty much lower through the day of trade, but closing very close to the day's low. That's where we've seen it. Let's pull up the broader markets, the Nifty small and the mid cap, if we can. There you go. So 1/3% higher on the Nifty mid cap, no complaints there. Even the Nifty small cap was up almost 0.5% in trade. So those were the 2 positives. Sectoral, if we can quickly pull that up, you'll see some of the sectors which were buzzing and in focus. PSU banks, the banking index itself, which was leading for the better part of the day, and pharma was in focus on the back of all the numbers coming in from the pharma space.
So financials and IT leading the gains over there. Thank you, Harsh, for joining us. Now, moving on, Hyundai India has added 2 new advisors for its IPO, Kotak and Morgan Stanley. The offering likely to be filed by June this year. Now, my colleague Tushar joins us for more details on this. Tushar, good evening. What are you picking up on it?
Yeah, hi, good evening. So essentially, it's the South Korean parent Hyundai Motor Co. that has added 2 new advisors for its India IPO that is likely to be filed by June. That's as per reports by Bloomberg and IFR. So what we know so far, Kotak and Morgan Stanley have been added as advisors for the potential Hyundai India IPO. That's in addition to Citi, HSBC as well as JP Morgan. Those were already the existing advisors as per as past reports that we have seen so far about a potential Hyundai India IPO. The Hyundai India IPO can raise up to about $2.5 billion. That would make it among India's biggest, if not the biggest. The filing will be happening by June. Given the size of the IPO, we are also looking at Hyundai IPO's valuation at about half of the parent's company in South Korea. Now, why is this relevant? Remember, Hyundai India now accounts for almost 25% of Hyundai's global business. Nearly 1 in 4 cars of Hyundai are sold in India now. This is as per the April numbers that came out last month. So, Hyundai's India volumes are also similar to those of South Korea. It's about 65,000 units every month. This is exactly the same as what is happening in South Korea as well. Hyundai has 2 manufacturing plants in Chennai and added a new one in Talegaon near Pune, which was actually owned by General Motors before it left the country. So 3 manufacturing plants. So any IPO right now plays into the hands of Hyundai India because it will step up the production of the company as well as step up exports and make it an export destination for the rest of the world.
All right. Tushar, thank you very much for joining us and bringing us that very, very comprehensive sort of a report on why this is important. Moving on now, Samsung has surpassed industry growth in the first quarter, says Raju Palna, Senior Vice President of the Mobiles Division of Samsung India. Now, he spoke to NDTV Profit about the company's growth plans. Listen in as he tells us if Samsung India will be able to beat the uptick seen in the smartphone industry.
The smartphone industry is moving through a very, very great, good stage that's there. We are seeing very strong volume as well as value growths that are there. While as the industry in volume is actually growing at only about single digits, we are seeing strong value growths that are there. In quarter 1, we've started off to a very good start. We are growing at about 30%, and with that, we are ahead of the industry growth. And we are at our number 1 position in quarter 1. We are at about 25% market share in quarter 1 in value, which also goes to say that consumers are upgrading. We are seeing new trends of consumers upgrading, consumers also looking at premiumization, adoption of 5G is on the rise. So the trends are looking very positive. We just have to be cautiously optimistic and create our marketing strategies and stories of upgrading consumers in the right manner. We are a full range player. We will be looking at categories which are the fastest growing categories and pursuing there through by meeting consumer aspirations and also launching a lot of new 5G models that are there. We will focus on upgrades, and Samsung Finance Plus is very unique in driving our entire upgrade strategy through affordability. Something that we see today and where we are growing quite well is the tier 3 and below towns that are there, where we are looking at the upgrades to categories like the 20 to 30K segment quite high in tier 3 and above overall is contributing to about 43% of the overall Samsung Finance Plus. So we're seeing very strong upgrades there. And our strategy ahead is also looking at not only value growths that are there, but also driving volumes by being present across various segments. In the 5G segment as well, I think so in the 5G category as well, in quarter 1 we have grown ahead of the industry in case of value, and we are number 1 in the overall 5G segment in quarter 1 2024.
Now, ITC's potential demerger of its hotels business has run into trouble. This after the advisory firm IiAS advised the shareholders to vote against the transaction. Sesa Sen joins us with more details. Sesa, good evening. To begin with, Sesa, take us through what the plans for the demerger were and what are IiAS's essential problems with this plan.
Right. So under the proposed demerger scheme, ITC will maintain 40% ownership of ITC's hotels, with ITC shareholders acquiring the remaining 60% in proportion to their stake in the parent company. Now, according to IiAS, this proposed structure, while designed to improve ITC's return ratio, does not provide shareholders a complete exit from the hotels business. Now, moreover, the hotels business inherently carries a high operating leverage and revenue volatility, and may over the period of time need capital support from ITC as its promoter. So the transaction does not materially reduce any capital support responsibilities for ITC. Now, additionally, IiAS has also pointed out that the hotels division, is relatively smaller in terms of revenue, making up only 3.5% of ITC's total revenue, and this may limit the potential for synergies between the hotel business as well as other businesses like agri and FMCG. Now, ITC on its part has said that the company has decided to retain its 40% stake so that the hotel business can use the ITC brand and associated brand equity, which would otherwise may be detrimental to sustained value creation for the shareholders. It has also argued that the hotels business has a strong balance sheet with a net worth of 9,600 crore. Zero debt. So, given that the hotels business will be able to raise capital, both debt and equity on its own. The ITC will convene the meeting of ordinary shareholders on June 6 to approve the proposed hotels demerger. So that's all for now. We will continue to watch the space and bring you the latest updates as and when they come.
All right, Sesa, thank you very much for that. In fact, to discuss this, we're now joined by Hetal Dalal, the President and COO of the Institutional Investor Advisory Service, or IiAS. Good evening, Hetal. Thank you very much for joining us. Now, Hetal, to begin with, what is your rationale behind the advice that you've given shareholders to vote against the demerger? You say that you believe that it does not unlock the value completely. Why is that?
Good evening, and thank you very much for inviting me to the show. I think you have to look at what is the company trying to accomplish, right? There is a need to demerge the hotel business. Investors have asked for it several times over, and therefore getting out of the hotels business is important. So to that extent, it is a step in the right direction. The question really is, does it really give them an exit of the hotel business? Now, when they own 40% of the business, what essentially happens is the hotels business is going to become an associate, so it doesn't get consolidated. So sure, return ratios improve. But at a very fundamental level, does it take ITC away from the responsibility of holding the hotels business together? It doesn't. Largely for the fact that it remains a promoter in the hotels business. It will have to provide capital support, not only in terms of equity, but also in terms of debt. I mean, if it finally says we're not going to provide credit support, the AAA rating of the hotels business will go up. So while the company can surely have a balance sheet which will raise debt, the question will be at what cost? If it wants to minimize the cost and provide that credit support, then therefore debt support will have to be provided. And hospitality as a business essentially is fairly volatile, high operating leverage. If you look at Indian hotels in the last 5 years itself has raised almost 4,000 crores in equity capital, right? So essentially it's a high capex business as well. As you acquire more hotels or you start expanding, you need more money. So therefore, it doesn't even take away the equity support that ITC has to provide the hotels business as its promoter. So at a very root level, you're doing nothing in terms other than separating the business and creating a structure which allows you to show better numbers. But it doesn't take away your capital support responsibilities, and therefore the hotel business will continue to drain the balance sheet as far as capital is concerned in the manner that it used to. It's just now that it's a separate entity. I think the other larger piece is the fact that, and let me take a step back. Also, why ITC hasn't been giving a clear answer in our view in terms of why does it want to continue owning that 40%? That synergies with the other business is a very, very small business. Hotels is 3% of total revenues, and synergies with the residual business of food and agri to what extent does that require for you to own 40% is certainly open to question, as is the whole manpower sort of mobility argument that they are using. Also, there's no clarity on the use of brand, right? The hotels business will have to use the ITC brand. Without a brand, the hotel business won't stand alone on its own. So the negotiation of what are the brand fees, what's going to happen, that's not decided yet, or at least it's not being published as yet in the public domain. And neither has the company confirmed that once this transaction happens or once the agreement happens, they will bring it to both sets of shareholders for a vote. So there is a certain degree of lack of clarity there as well.
Right now, as you were pointing out, of course, they've said that if they don't hold that 40%, the new entity will not be able to utilize its brand name and the goodwill that's essentially associated with the hotel operations. And this, they say, is going to actually be detrimental to shareholders. Do you think this sort of an explanation actually cuts ice, or do you think it's just not reaching deep enough?
No, see, I think there is value in saying that the hotels business doesn't stand alone without the plan. That's true. But having said so, this is a benefit to the prospective shareholders of the hotels business. From ITC's shareholders' point of view, they want an exit out of the hotels business, right? ITC is not only holding on to the 40% in the hotels business, they continue to hold on to the almost 14% equity in IiAS, and they continue to hold on to, I think, about 7% in Hotel Leela Ventures as well, right? So while you may call them financial investment, but at the end of the day, the hotels business continues to take the capital of ITC and live off the capital of ITC and of the tobacco business, and therefore you're not really in effect giving shareholders an exit from that hotels business.
Now, how do you think then the demerger should actually go forward? How should it be structured? What would your advice be in terms of how should they do it?
I think we would have been far more comfortable if there was one clarity on what was going to happen to that 40%. Maybe they argue that yes, we have a strategic if there is a strategic buyer at the other end, we would be open to sell it. So if there's clarity on what that 40% was going to do, then that would actually give us more reason to sort of have a different view, right? The other is the whole issue around the brand, the license fee, the arrangement. I think that should have been brought to shareholders at the point in time that this transaction itself is being brought to shareholders. If you would look at, let's say, for the sake of argument, that this was actually being sold to a private equity investor, a third-party investor, sure enough, that agreement would have been carved in terms of what is the use of the ITC brand, who gets to use it, at what point in time, and what are the terms and conditions. This is a demerger, they own 40%, therefore the clarity isn't there. And third, ideally, for investors, they want an exit out of the hotels business. So ideally, you should do a demerger and have a brand agreement or an association to use the brand. But you could argue there could be so many sort of terms and conditions you can put into it, which says that let's say you have another controlling shareholder, there's a hostile takeover which happens, then the usage of the brand drops, or some of these other clauses you can always build in. But these would be some of the options, right, that ITC could have looked at. Or at least, if nothing else, if this was the structure, at least provided greater clarity in terms of what investors are finally going to look at over the longer term.
Right. Hetal, thank you very much. So what you're seeming to point out is that perhaps more clarity in terms from ITC will help shareholders make up their minds better. Thank you very much, Hetal, for the time being for joining us.
Thank you.
In fact, let's now look at a story from the education sector. 38% of IIT students are yet to find a job through campus placements this year, according to an RTI report. In 2024, out of the 21,500 students registered for placements in 23 IITs, only 13,410 were placed and over 8,000 students remained unplaced. Is there a placement slump at IITs? What are the trends suggesting? That's what we will be discussing with Dheeraj Singh, who is an IIT Kanpur alumnus, and A.R. Ramesh, the CEO of Team Lee's degree apprenticeship. Do tune in to that NDTV Profit exclusive at about 6 this evening. Welcome back. You're watching The Reporter on NDTV Profit. Let's now take a look at the update in the Pune Porsche accident case. Two Sassoon Hospital doctors have been arrested after they allegedly replaced the blood sample of the accused minor. Now, the switched blood sample had no alcohol content. Remember, two people were killed in an accident at Pune's Kalyani Nagar. We have Radhika Ramaswamy now to give us more details on the arrest of the two. Radhika, good evening. Now, Radhika, these two new arrests show that there has been an attempt to shield people from the very beginning of this case. There has been collusion at every level.
Absolutely audacious attempt by the family members of the minor accused to shield him. In fact, multiple arrests have taken place over the last couple of days, and the latest one being of the two doctors who in fact had gone ahead and manipulated the blood reports, the blood samples, by replacing it with the blood samples of somebody who had not consumed alcohol, so as to show that this minor was not under the influence of alcohol. So this is obviously grievous offence as far as these doctors are concerned. It includes the head of the forensic department of Sassoon Hospital as well as another doctor. Now, a third arrest has also taken place, which is of a medical staffer who had allegedly carried bribe money from the father of the minor accused to these doctors. So therefore, this third person has also been taken into custody. So a bribe was offered, given, gifts were offered, given, is what the cops have been telling us since the beginning. So yes, additional sections also been added to the FIR, including forgery, destruction of evidence and criminal conspiracy as well. The father of the minor has once again been taken into custody so as to understand what kind of communication happened between the father and these doctors in order to manipulate the blood samples, and how much money in total was offered, given, were there any other gifts given or any other help asked and given. So therefore, once again, his custody sought, the doctors being produced before the court at this point. So multiple developments taking place in the case, but all of this showing to what extent the family members of the minor accused went to shield and protect this boy.
Absolutely, and it's quite frightening, honestly, Radhika, to see this kind of collusion take place in a city like Pune. Thank you very much, Radhika, for the moment, for joining us. Now, on to more national news. Two people have lost their lives as a cyclone caused havoc in West Bengal. Now, it has now weakened into a storm. The after effects of the cyclone include power outages, civic infrastructure damage, and devastating winds. My colleague Saurabh Gupta sent us this report.
Cyclone Remal made landfall last evening, and finally things are returning to normalcy. NDRF teams have been visiting area. State administration has been working. 1 lakh people had to be evacuated. Flights resumed this morning. Train services also were affected, with nearly over 200 flights had to be cancelled as the Kolkata airport was shut for operations. Train services had to be shut. The Calcutta Metro had to be services had to be withdrawn on one line because of water ingress. But now, of course, there is, of course, normalcy returning, with things being sorted out as the impact of the cyclone subsides. At this point, we were at a spot where this tree had fallen on a high tension wire. That also has been removed, and power supply is also to be restored. In most places, power supply had to be cut off, as a cyclone means that there could be an impact on trees falling on power supply lines, and that could lead to electrocution of people. That has been addressed. In most places now, the administration is preparing to restore power supply so that normalcy can return. And 2 lives have been lost for sure. One in Kolkata, one in South 24 Parganas. And of course, these are unfortunate deaths, but largely the administration has been able to prevent loss of life by preparing in time, making sure that the administration moved people to cyclone shelters. We visited a cyclone shelter as well. And now, of course, the focus is on ensuring that people return to normalcy and normal lives as the impact of the cyclone subsides. The cyclone, while making landfall, had speeds of 110 to 120 kilometers per hour, gusting at 135 kilometers per hour. But now, of course, the impact of the cyclone is subsiding, and the attempt is to return to normal life. With camera person Aniruddha Tripathi at the South 24 Parganas district of West Bengal, Saurabh Gupta, NDTV Profit.
Now, in an exclusive conversation with NDTV's Nikunj Garg, Defence Minister Rajnath Singh talked about India's growing economy and how the country has managed to establish a global image under Prime Minister Narendra Modi. Listen into a slice of that conversation.
इकोनॉमी का जहां तक प्रश्न है, इकोनॉमी की साइज में आपको जानकारी है कि 2004 से लेकर 2014 तक डॉक्टर मनमोहन सिंह जी भारत के प्राइम मिनिस्टर थे, कांग्रेस की गवर्नमेंट थी। उस समय भी हमारा भारत इकोनॉमी की साइज के मामले में दुनिया के देशों में वह 11वें स्थान पर खड़ा था। लेकिन 2014 के बाद 8 वर्षों के अंदर इकोनॉमी के साइज के मामले में यही भारत जंप लेकर दुनिया के देशों में 5वें स्थान पर पहुंच गया है। भारत ही नहीं बल्कि दुनिया की जो फाइनेंशियल फर्म्स हैं, इकोनॉमिस्ट हैं, अब वो इस बात का दावा कर रहे हैं कि भारत की अर्थव्यवस्था दुनिया में सर्वाधिक तेजी के साथ आगे बढ़ रही है। अब इसमें कहीं दो मत नहीं है कि 2027 आते आते भारत की इकोनॉमी दुनिया के टॉप 3 कंट्रीज में आकर खड़ी हो जाएगी। मैंने इकोनॉमी की साइज हमारी दुनिया की टॉप 3 कंट्रीज में होगी।
Well, that's all we have time for on The Reporter. Thank you very much for joining us on NDTV Profit.